My name's Pearl Hubert, and this is
I'm Andrew Hanna.
And we're going to be presenting our Chapter 13 and Chapter 14 presentations. My first subject of Chapter 13 is the economic functions of the government. The first one is safeguarding competition and market systems. This is basically making sure that monopolies don't happen in the marketplace, I guess. And then also giving consumers what they want and when they want it. The second one is providing public goods and services. These ones are available to everyone and making sure that supply and demand are all good. So number 3 is correcting harmful externalities, which is basically something that the people don't pay for, but the government just does. That's like correcting pollution and all that kind of stuff. And then the fourth one is maintaining economic stability. These are only small changes that are made in the government at a time. Number 5 is redistributing income and wealth. These programs are considered beneficial externalities. For example, that would be like a water fountain or like a plaza or something that everyone gets to just enjoy, but they don't all pay for.
Wow! This water fountain in this plaza is real beneficial externity!
The sixth one is resources. They decide where money and resources go in the government. So my second subject of this chapter is why the government grows. There are reasons that include population growth. So when the population grows, so do the needs of the government and the government's actions and stuff like that. Secondly, it's rising expectations. Okay, the people are expecting to live better and they're wanting to have better mattresses, like Ronnie said in class. Okay. So my second subject for this presentation is why the government grows. There are a few different reasons. The first one being population growth. So as the people grow and just the population grows, so does the government and the actions that the government needs to take.
Here's the baby. It's a population growth.
Oh, baby!
Secondly, it's rising expectations, which is just expectations the people have of their government, like the roads that need to be fixed or just all the like beneficial externalities that they're wanting. Thirdly, it's inflation, that when there's like a steady increase in prices, that's when the government grows. Fourth, it's more military spending. That has to do with when an unexpected, I guess, military problem happens, or my first thought is like a terrorist attack, I guess, happens, there's going to have to be more military spending, and then thus the government grows. Thirdly is the federal budget. The federal budget begins on October 1st of one year, and it goes all the way around until September 30th of the next year, and that is called the fiscal year. It basically works that in 3 short steps. The president is going to suggest a budget to the Congress. And then the Congress will change what needs to be changed. That is called the unfunded mandate. And then step 3, they send it back to the president for his signature and approval on it. That kind of goes back and forth until they have a budget and everything on it. Amen.
Alright, so I did mine on taxation. So the first bullet point for this one is the pays for the cost of the government, so why we use taxes. So Social Security and Natural Defense. And then for I can't say that word.
Redistribution.
Yeah, what Pearl said. Wealth is like Robin Hood, basically taking money from the rich and giving it to like the poor. Promotes certain industries, puts tariffs on goods and makes government more money, and then influences consumers and business spending patterns, which levels of taxation affect the amount of people spending and investing. discourages certain behaviors, like puts tariffs or taxes on like drugs and cigarettes.
Hey man, you're sinning. Give me money for that.
I spent this on my money on that.
You bum.
It's outside and it's become, we're good. Federal income tax is an individual income tax basically. The nation's only progressive tax, which a lot of people don't know about. It takes a larger percentage of taxes from higher income levels, and rather than low income people, it takes it from the higher income people.
Hey, it's income tax time.
No!
Yep, give me all your paycheck.
The whole thing?
Yep, I don't care.
No, I worked hard for that. Income tax. The IRS is an internal revenue service, which is like a collective tax. Income non-subjective taxation is like when a family gets doesn't have to like pay taxes or whatever, or is exempt paying taxes. They have like a $7,000 to $14,000 income or earnings. A regressive tax is like a large tax from low income people rather than high income people. Elderly and disabled tax credit. Taxpayers 65 or older may be entitled to a reduction up to like $1,000 to $2,000 of their income tax. And then income tax favors rich. Like, there's opinion of some people, but like it favors the rich and exempts or accepts the poor and discourages investments. And other federal taxes are like corporate income tax, which is like a net profit of the company. Yes. All right, an excise tax is a tax basically on like a certain like good or something like that. And then an estate or gift tax is like a it's to prevent like wealthy people from like giving their property away to like escape estate tax. This is like basically like, okay, if someone has like a bunch of property, instead of like giving it away or something like that, like a gift, and avoiding taxes, you still have to pay taxes on it. And then there is like Social Security and Medicare tax, which is a tax. Well, this is just taken out of your paycheck in order to pay the cost of like your Medicare and stuff. Okay, so we got progressive, regressive, and proportional taxes. The first one is a progressive tax, which is a percentage of income paid in the taxes increases, and once income increases, yes. Regressive tax takes a larger fraction of one's income as the income decreases, and vice versa. A proportional tax takes the same share of one income and at all levels of proportional stuff. So that's the end.